Welcome back to Financial Fitness Northwest, live on 1150 KKNW. It's now time for the Riley Johnson Team Market Update. We are dedicated to provide the tools you need to make informed decisions on how today's events in our local economy can affect your buying power. And today, we're talking about the fact that buyers do not typically put down 10% anymore. It's rising. Lower down payments is rising, and there's lots of reasons for that.
Yeah, 20%, no. 15, not so much. 10, not even. It's lower. It's lower, people.
It's lower. 1.5 million Americans have purchased a home with down payments under 10% over the last 12 months.
That's amazing.
Yeah.
Yeah.
I think it's good for people to know. You don't have to have 20% down or even 10% down. There's a lot of options out there.
Well, yeah. I mean, if you're doing a conforming loan, 3% is the minimum down, and high balance conforming is 5%. So, and then there's down payment assistance programs.
Yeah, there's a lot of definitely a lot of options. But even people, this is including a lot of people that actually do have money to put down,
right?
But
they're
choosing
less
not.
Down.
Yeah, choosing not to for lots of reasons.
Yeah, even in I mean, we're talking. This article we're referencing, we're talking about conforming loans, but even in the jumbo market, people aren't putting 20% down anymore, even though they have it, because there's so many options available to you. It's better to be strategic about your money.
Yeah. I mean, the low down payments are not just for the first-time home buyers. The programs have allowed homeowners who want to capitalize on their equity they have in their homes so they can use the profit from their sale to either pay off other debt. They can, fund education for their kids.
Mm-hmm. Save for their retirement, invest their money.
Start a business.
Right. We have like all three of those things happening right now in our business for our clients.
We actually do.
Yeah. Selling their home to use the money to pay off debt, and then putting smaller amount down, so they're actually in a better position on their new purchase. Putting 5%, even though they could put 15. Or using the money to start a business. We have someone starting a hot yoga business.
We do.
We wish we could go, but it's a little far north.
I know.
But that's pretty cool. So there's lots of options. So when you're looking to buy a house, don't think, oh, I gotta save for your down payment if you don't have it. And if you do have it, doesn't necessarily mean that you gotta wipe out your bank account to buy your house.
No. According to the new census report, home equity was used to start 7.3% of all businesses in the United States, which equates to over 284,000 businesses.
Wow.
So it's like more common than you might think.
Wow, that's amazing. That's like full circle. The economy, the houses, the equities, now making more businesses, improving our economy more.
Creating more jobs.
Right. And then go buy more houses. People need to come here to work at those jobs.
I know. It's, it's always been that way, the building industry. I mean, the economy is gauged on construction.
Right. Yeah.
And real estate sales, because it does point to a lot of different directions positively when everything's going well, and it's really going well right now.
It is. So, back to putting less than 20% down, a lot of people have this sort of negative feeling, oh, MI, you've got mortgage insurance. Well, there are a lot of options. There's no MI programs. There's split premiums. And sometimes even paying like a really small monthly MI amount might make sense. So you really need to be sitting down with your lender and going over your finances. And they should be advising you on your whole picture, not just on, oh, I want to buy this house and here's how much money I have to put down.
Yeah, because a lot of lenders may not actually present mortgage insurance options. It can get kind of complicated, if they aren't familiar with all the different ways to structure a loan with mortgage insurance. It's a good idea to find that out and maybe get a second opinion if you don't feel like you're getting all the information.
Always get a second opinion, no matter what.
Yeah.
Because it's true, not every lender is created equal, and especially if you're working with like a bank or credit union, they're going to just do exactly what you say. If you say, I have 10% down, they're going to give you 10% down with monthly mortgage insurance.
Most likely.
They don't necessarily sit down with you, look at all of your finances and say, you know what, maybe you should put 5% down and pay off this debt. So talk to the Riley Johnson team.
We'll help you out.
We'll advise you. Well, thank you guys so much for tuning into Financial Fitness Northwest. next week, we have a great show in store, so tune in. Bye.